Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. I've recently been away speaking at conferences and seminars on technical analysis, so it's good to come back and actually do some proper technical analysis on metals today with a fresh set of eyes, though for some of the metals it looks like I haven't really missed much. Okay, so I said 5 weeks ago how the two recent bearish patterns in this market, that's the two bearish shift pitchforks in dark blue and light green, how their very act of separation was going to rip each pattern to pieces, and that neither would come away from the action unscathed. When it started happening in late October, I thought the dark blue June to July shallowly bearish shift pitchfork would be predominant, as it was larger and older. It was larger and older than the steeper August-based bearish shift pitchfork, and for just over a week it looked like it might be right. But then in mid-November, the market started tracking down the broken upper time, currently at 15,785. A procedure I had seen before in many other markets and in other pitchforks, and that's of the more recent bearish pitchfork. This lasted until this week when so far, for the first time since the crossover of tines in late October, the market has moved up and away from all the pitchforks, predominantly to stay around the May 2021 low at 16,610 and capped by the June 2021 low at 17,095. So that is the current situation. However, I suspect this seeming sideways movement may not last, as coming in from above we have the declining short-medium moving average currently at 17,720, which may well apply pressure on prices and cause an action or a reaction. On top of this, we might see this moving average mix with prices as soon as the end of the year. On top of all this, we also have seemingly constructed a mid-November to date sideways triangle, currently 16,285 to 17,025, which also reaches an apex at the end of the year. So overall, we may see an interesting last 2 and a bit weeks for this year. LME 3-month zinc. Though I've been away from charts for a few weeks, nothing much seems to have changed here. Okay, so in the bigger picture, this market exited an April to mid-June bear channel into a shallowly rising bull channel from mid-June to mid-August. It then exited that pattern into a third pattern, a late May to mid-August bullish Andrews pitchfork, which morphed into the present pattern, a bullish shift pitchfork for the same move. To me, even now, it is too shallowly bullish for a bullish shift pitchfork, but it's still there, and I've highlighted it on my daily chart in bright red. This is not a perfect pattern by any means, but it's still driving the market gradually higher at the moment between the middle time above, currently at 25.01, and the lower time below, currently at 23.36. However, in the even larger strategic picture, the market, despite rising since the May and August lows, is still within a very large May to August 2022, that's right, a pattern that is well over a year old, the May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. We are at the moment between the middle time below, currently at 21.87, and the upper time above, currently at 27.22. The market sat between these two tines now since late August. I also wish to further emphasize how this bearish shift pitchfork, which is now, as I said earlier, well over a year old, I wish to emphasize how it's still working in the overall bigger picture to drive prices lower, despite moves upwards during this year. I wish now to discuss the recent bearish pressures placed upon this market. This was something I cautioned about 4 weeks ago, specifically the combination of the impact of the descending long moving average from above, currently at 25.39, during November, that tempered the rises, and the monthly key reversal down we saw in October, that together have led to the current situation with the market sitting a little below all of the moving averages. It would not surprise me to see the lower tine in bright red being tested, and even a possible move towards the October 2020 low at 22.82, unless some new bullish pressures emerge.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.